Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming your way with a market recap for the 25th of October. Nothing boring about the market. Yesterday we sell off dramatically. We didn't gain it all back today, but we definitely fought back today, as pretty much what was down yesterday was up today and vice versa. So we continue to see a very back and forth volatile market, really kind of a day traders type of a market as we've discussed lately. So we'll see how everything shook out. Before we do, another big slate of earnings before tomorrow's open. We got some big ones. We got Google, we got Amazon, we got Intel, to name the biggest of the bunch. All in all, I think around 30, give or take, S&P 500 companies reporting, maybe 40 before tomorrow's open. So we are still in the midst of earnings season, and we are still in the midst of pretty high volatility in the market, as we will find out as we take a look at our indexes first. Of course, here we are on the S&P 500. Really had a nice gap on the open. You know, as we often see, we've been seeing it pretty regularly as of late. You know, in these volatile markets, we're seeing a lot of movement in the over hours futures market. It's impacting our open. We really built off of that. We're able to run up pretty strong for much of the day. Ultimately, we did sell off of the highs from a broad perspective. Overall in the market, a positive day, but I'm not going to get too excited about it. I mean, I think we have to continue to play it like we've been playing it. A very volatile market, very jumpy. It can get moving very, very quickly one way or the other. And I think we're going to need at least another week personally to get through the majority of these earnings before we have good reason to simmer down. But we are seeing, you know, for whatever it's worth, we did see some nice bounce back today from the bulls. So while that's, you know, certainly not enough to get me bullish on the market, you know, I'm just happy to see that they exist and are willing to at least fight when they see good signals. Again, this continues to be an intraday traders market in a lot of ways. Looking over at the NASDAQ kind of really had, I think, illustrates that point. We ultimately really went sideways for a little bit. Those of you who were catching the halftime report, Matt and Tim brought this up. We were going really, really sideways at just below 7,000 on the NASDAQ. That broke out. You can see we have a 15-minute chart here. Really led to a nice, clean little rally for about an hour, you know, give or take, before ultimately giving it back as day traders started to take profits. I do think it continues to be, you know, a day traders type of a market over a swing traders type of a market. Although, again, a lot of our, you know, credit type of strategies are out of the money spreads that are going with the trend, which our overall trend is down, or, you know, probably treating us all right as well. But interesting, the NASDAQ ran up into that 200-day moving average, bumped its head, and sold off from that point. So maybe not the biggest thing ever, but very interesting that that's exactly where it stopped for the day. Over in the Dow Jones, maybe, there we go. Over in the Dow Jones, very similar type of day, back and forth a little bit, but overall building on the momentum from the open, closing, you know, towards the top end of the range. But again, much like the other indexes, did sell off of those intraday highs. And lastly, our old friends over in the Russell. No surprise, not too big of a different chart. We certainly overall have been struggling more, as you know, more than the other indexes because they got the party started first, right? But you know, another little rally candle, still very bearish from a trend. Again, this isn't going to be enough to get me to be a bull by any stretch of the imagination. We are, you know, consistently making lower highs and lower lows. Very few things are holding up from that perspective. As we shift gears over into our different sectors, they're of course going to mimic the overall market as a collective unit, where we're going to see a nice little gap up on the open, followed by a kind of sell-off at the top. Interestingly, over in our material sector, we kind of ran right back into that old support level, and it is a level. You know, we kind of looked at this zone before. It's not a specific number, but they kind of topped out at that old support zone, testing it at least as intraday resistance. Obviously, still a very bearish looking sector, and also a very extended to the bearish side sector. So we definitely are, saw a little bit, but again, we didn't see anything to change the technicals in the materials. That's for sure. Very back and forth day in energy, closing very, very flat, but really continues to be, well, just scary. From a trick-or-treating point of view, this is an ugly chart. Now, we do have this support level from days gone by that is kind of holding us up right now, it appears, within that sector. Let's continue to monitor how it responds at that support level. It's very, very extended to the downside, but that is kind of another one of those line of defenses. When we break support, it doesn't matter if it's extended, right? It can continue to fall. Over in the financials, they fared up a little bit better today, in my mind at least. Ultimately, looking very much like the market, selling way and well off of the intraday highs. But again, at that support level, we've looked at these over the course of this week. Some of these sectors are pretty major levels of longer term support, putting up a fight there. I think the line in the sand is pretty clear on the financials. Support's down here. Resistance is this breakdown point. Love to see it work into that and challenge that old support as new resistance. We'll see if I get my wish, though. I'm not going to hold my breath. As we look at the industrials, very similar to the material sector, kind of closed right below that old support zone. I think this is a little cleaner level of support on the industrial sector for whatever that's worth than it is on the materials. It's much more of a zone, I think, on the materials. And of course, support is always a zone to a certain extent, but it looks like it's a little more defined, I guess, closing right below that. Watch these two, the last couple of days floors, that little intraday floor, see how it responds if it tests that again here going into tomorrow. I mean, I would love to, I don't know if I'm going to get it. I'm certainly not expecting it, but I'd love to see a flat day tomorrow, but I probably won't. With the volatility of this market, I don't mind these day traders markets, but I also wouldn't mind letting some things shape up from a swing technical sets. See if I can say that. Our technicals shape up from a swing point of view instead of constantly looking at intraday floors and ceilings. But that has been effective in this market, identifying these intraday levels of support and resistance and basically playing the breakouts as they happen. So keep an eye on that. Looks like it's going to kind of struggle again. We're very extended to the downside in pretty much everything that's to the downside right now. As we take a look at our technology sector, much like the NASDAQ, did have a good rally percentage-wise today. Hasn't really changed a lot from a charting perspective, though, closing right in the middle of yesterday's enormous bearish candle. Really nothing to say there. A lot of tech earnings are coming out, so that definitely, you saw things like Twitter had a good earnings report, have Amazon, Google tomorrow, Apple next week. So, we do have quite a few tech earnings on the horizon that might push that one way or another. Over in staples, it was an interesting day after testing resistance yesterday and really getting pushed down off of those highs, closing closer to the bottom of the day's trading range. We actually dipped way down today and kind of saw the reverse candle where we kind of came down, pretty substantially, only to rally throughout and close fairly close to the top. I think we're continuing to look at this the same way. We are within this range. Traders are looking at these defensive sectors to a certain extent right now and giving them a little bit of the benefit of the doubt. But as we'll see, that doesn't always play out on our old friends in utility who something that I is kind of funny to me. Kind of funny, like ha, not point and laugh out loud or anything like that. But after yesterday's break, utilities gapped down on the open right below that breakdown point and weren't able to even test that old resistance as a support level, which gives us a failed breakout. Fair or not, I don't know, but we were not able to hold that breakout. And to be fair, we didn't get to test it, but we are where we are nonetheless. Certainly not able to build off of yesterday's momentum and right back, at that old resistance level once again within that sector. We could continue to monitor it. And certainly this isn't the first fake out that we've seen together, right? And we always, bring it up. It's really that follow through, on these breaks. It's fine to get into them early. We just have to accept that if I bought into the utility breakout yesterday, I'm getting a great price, but I have, accelerated risk, at least, from it not working out, because I'm not getting a ton of confirmation. And certainly in a market like this, is kind of a day trader's market to boot. It's really that second day, in my opinion, that we get that follow through that confirms that breakout. Of course, we did not see that here in the utility sector. Our trend remained intact, of course, but certainly a failed breakout attempt in utilities as strong as it looked yesterday. Well, that's old news now, right? Now, something that's not old news is the healthcare sector responding pretty well off of its 200-day moving average. I was watching this early in the trading day, maybe 15, 20 minutes into the day, and it had kind of worked towards that 200 and was kind of doing that back and forth, trying to figure out whether that was going to hold or whether it was not going to hold. Ultimately, of course, at least for today, the bulls did win that fight. In one of our few areas that's actually holding the 200-day moving average, or simply meaning it's above the 200-day moving average. A lot of things aren't. Definitely an interesting development. I like it. I don't trust it. But I do like it. I do like that we're able to hold that support level, because that's what we want to see. And we definitely want to see things fight, when they're at support for us, for sure. So very interesting development over there. Again, we've not seen it really for quite some time now. Follow through. Can we build off of this? Every time we see a bullish candle, we talk about, can we follow through? And well, the next day we're always saying that seller's right back where they belong, right? Be surprised to see that again. But again, I'm hoping for a boring day tomorrow myself. Discretionary, kind of as it's been prone to do, kind of bounce back with the overall market, but still kind of showing some relative weakness, kind of using the same highs over the course of this week on the intraday as its resistance level. Of course, this was bearish before being bearish was cool. We broke down over in this sector before we broke down in the overall market. Continues to be, in my opinion, an overall bearish place to be, but certainly interesting that we're developing that clear intraday top right now. Still in a very volatile market, but intraday keeps acting the same. I do find that interesting. Hopefully that can last one more day as we go into next week. Real estate kind of tried that breakout yesterday, failed it, closed right below, was able to push back through, and of course close above that breakout point here today. And a pretty strong signal from a bullish point of view, taking out that resistance, holding that resistance. I'm still not ready to say I'm bullish on the real estate sector, but for the first time, I can see that side of it. All of a sudden, the sector that had been performing poorly, and this is, of course, how it starts, has now made consecutive higher lows, and by virtue of the break, consecutive higher highs. So that is a bullish signal. If we just think about this as a trend from right here, this looks like a nice little upward trend, right? Certainly, we're going to have multiple layers, and that's really the problem, that I think the bulls are going to have collectively in the short term, is we have so many layers of resistance, previous levels of support or resistance, moving averages, intraday levels. There's just so much to fight through from a broad point of view. But with the real estate sector's chart, I cannot say that I do not look at this as a bullish chart, because by my own personal trading rules is, if something's making higher highs and higher lows, you should be bullish. If it's making lower highs and lower lows, you should be bearish. Very simple, very straightforward. These guys would fit into the, well, hey, they are making higher lows and higher highs. My opinion is, I still think we want to be real careful with everything in the stock market right now. But my rules say, hey, it's okay if I wanted to go long into this because of the making higher highs and higher lows. Really just easy, simple rule to make sure I'm not trading against the trend, because I'm human just like everybody else. And sometimes I want to pick tops and bottoms. My rules make sure I don't get away with that, which is a good thing. And of course, we had a really nice bounce back day, up over 3% in the communication services sector. I don't know what to make of it from a technical point of view. Much like the overall market, we're kind of smack dab in the middle of yesterday's range. But I really think that the key here, we didn't see a ton of great things develop on our charts. I have to give the real estate sector a little bit of credit, because I do like that technical setup. But for the most part, our charts are pretty unchanged from where they were, have been. They're certainly leading on the bearish side, failing at support, failing at resistance. But to me, it's the resiliency. It's not turned around. We haven't got signals. If this is the bottom, it's going to be the bottom, but it's not because we had strong technical signals that, the 25th of October was the day that we should have known it was going to be the bottom. But we do see resiliency in the market. And then I think that has to count for a little bit. Although, with that said, I still think we have to be careful. Trading, we are clearly still in a volatile market. It can move a lot. It can gap a lot. It can get going. And that is just the market that we're in, which is why so many traders that I know kind of shifted over to day traders, even though that's not their cup of tea. But it also has been a very interesting place for selling options. And I'm sure people are doing okay buying options too. But some of our credit strategies, have been holding up pretty well from what I've been seeing. So it's not all bad. It's just, it's a volatile market. And whatever that means to me or whatever that means to you is what it means. But again, the important part is recognizing, hey, this is the market that we're in. It doesn't matter that I do or do not like it. I need to work within it. That might mean I just sit around and watch it until it simmers down. That might mean I'm day trading like a lunatic or somewhere in the middle probably for most of us. But that is where we find ourselves over in our sectors here today. Again, not a lot has technically changed. We did see a few of the areas kind of hang around those support, from days gone by, levels of support holding or hanging right below. So it should be an interesting day tomorrow. But I don't really think we've got any great signals in our different sectors. Real estate notwithstanding, I don't think that's a great signal. I just do think it is a buy signal in the real estate sector. Over into the metals market, just another day for gold. We're now on that just slow drift. After we broke out, we consolidated. We don't really ever feel like we're moving, but we're just ever so slightly drifting up, slowly but surely, as just a little bit more money keeps trickling into this. More and more people appear to be, at least for today, getting on board with the breakout. Now, we haven't seen that takeoff day, and now we can trust it. But certainly continue to push up a little bit further, overall in that area. Again, this is really kind of what this chart has been telling us for for a couple of weeks now, right? We're broken out. It's okay to buy. It's okay not to buy. But if you're a bear, you probably want to see it, work into some resistance or break some support. If you're a bull, it's just, are you sold yet? And it's certainly understandable if you are, in my opinion. It's also understandable if you're not. We said, last week, this is the first time when we broke out here a couple of weeks back. This was the first time we broke resistance in months. So it's perfectly reasonable for, not everybody to want to be jumping up and down and throwing all their money at gold. But that does continue, in my opinion, to be a bullish signal on gold as long as we hold that 1220. Silver, very similar. We continue to go back and forth, up a little, down a little, never really going anywhere. I still think. And at least so today, I think, and I know I'm certainly not alone. A lot of people have been waiting for the 15 for the signal. And this is why, we obviously didn't know the future, but I don't think anybody's really surprised that it's taking some time. I do still like the break of 15 if that ever does happen, but we are still very sideways with what I would personally say a bullish bias on the silver market. Over in the dollar, we were able to carry through off of yesterday's break. So we did see some nice follow through. Working fairly close to that 97. We didn't quite get there. We didn't close at the highs, but we did close near the highs over in the dollar. We had our break. We do have that overhead resistance looming on top of us, of course. So that will definitely be something in that 97 range, just shy of 97, that we do want to keep an eye on because, the only thing we know with absolute certainty is last time we got there, we got knocked down pretty heavily, right? I'm not saying it'll happen again. I don't know. But I do know last time we were there, that is, in fact, what happened. So let's monitor that. That could be a profit-taking point. That could be another breakout point. That could be another point that knocks us back down again. So I do think that is an important price because we have seen that happen before. Natural gas continues to be pretty volatile within that range. Again, personally, I maintain that we really should be watching this to break one way or another before establishing a directional bias. I do understand people who try to trade within that trading range. It's a fairly good size trading range. So I do understand people that are trading that, but they're probably, better suited being intraday traders right now, in my opinion. I really think our signal is just wait for a break one way or another. That has not changed for a bit. And I don't really see it changing until we do break, but you never know. You never know. And lastly, over in the crude, market. We did see some bounce back here today, kind of worked back up into that 200, back into those highs from yesterday. It's always fun to look at these things, especially the commodities. I really like to look at the commodities on shorter term time frames. Here we have that 15-minute chart. This, of course, was yesterday's high where that 200 is, kind of ran back into it here today and pushed back down. Now we have a little bit more information than we did yesterday. It's not a ton, but it is some that, that is a pretty clear level of resistance. While I don't know that I would call myself one of them, I can now start to see an argument that breaking above that 200, breaking above those highs in that $68 range could be an opportunity to buy. I would definitely say as a potential buyer, it would have to do that before I would be open to the idea. Again, maybe I could change my opinion down at support towards 64 there. But if we were to see some upward movement, not saying I would buy at 68, but I could see the argument and I wouldn't be fundamentally opposed to it by any means. That's taken out some intraday resistance, obviously getting back on the right end of that 200, which wouldn't be a bad thing. I don't necessarily expect that to happen, but I am open to at least kicking that idea around. How would I feel about potentially trading it there? I think that's probably pretty aggressive, and I think that would really probably fit best into somebody's mindset who was very bullish on the crude market, and I would not consider myself very bullish on anything most of the time. Certainly in charts that are kind of choppy like this, it's hard for me to say I'm very bullish. But I do think, now that we have another day of that intraday resistance holding through, we can look at that. Maybe it's just from a short-term perspective if we take that out. On the same token, now we have 3 days in a row of kind of using that same intraday low. Right now we kind of have the same, that type of floor building going on. So if that were to break, that could be a short-term signal to the downside as well. And that kind of would be going with the overall current momentum of the energy market. Might be easier if that's the way it broke. But I can't really say that I'm unhappy with the development of crude over the last couple of days, building what, again, it's short term. And so this isn't going to apply to your, maybe every single, or maybe even your average swing trader. But these short term floors and ceilings that are forming, they can create little short term opportunities when they ultimately break. And the nice thing is, sooner or later, one of these two is going to break, right? Whether it's the floor or the ceiling, only time will tell. Whether it's tomorrow or a month from now, only time will tell. But we're not going to stay between 66 and 67, 70 in the crude market forever, right? So keep an eye on those areas, whether those are areas you're looking to trade or not. Certainly, I understand if you're not. And I probably would tend to agree with you more likely than not. But those areas are starting to develop as important price points, can be some interesting spots to look for from an intraday perspective, in my opinion, as we move into tomorrow as well. So that is where we find ourselves today, ladies and gentlemen. Another busy day in the market, and then again, the one thing that I think we can say about a market like this is it's volatile, but we recognize that, well over a week ago now, right? So we're not surprised that we're seeing some crazy stuff happening back and forth in the market. When things get volatile, they tend to be volatile for a bit. It will simmer down eventually. It always has. And I guess I don't know the future, but it always has. I will go ahead and bet on, the past in this case. But right now we are still volatile in the market. No two ways about that. We're halfway, maybe a little more than halfway through earnings season. Usually for me, this is kind of the point of no return. Once we're at the end of this second week of earnings, we're kind of past the halfway point, but not quite, not quite done. Next week, we'll probably be kind of tailing in towards the finish line, although there will still be plenty of companies yet to report after next week. But I think most people would tend to agree that after next week's earnings, we're going to be winding down earnings season. They've been mixed. There's no doubt about it. You've seen some huge upward moves, huge downward moves. You saw Twitter, pop today. Saw Love, absolutely get, killed, gapping down, just to name a couple from today. I'll be sure you're kind of staying up to date on those earnings calendars for any trades that you have going for yourself, to not be caught off guard. You never want to wake up to a love, right? I'll let you guys get out of here, but you never want to wake up surprised, right? Never want to wake up like that. So I'll be sure to stay on top of those. I know you guys will be doing that. With that, ladies and gentlemen, as always, it is my pleasure, and I do appreciate everybody's time. Be sure to hit that subscribe button and that notification bell if you haven't already, to be alerted to any new videos that we've got going on over here at Tackle Trading. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're finding interesting throughout the course of the market day. If you enjoyed the market recap, it is always helpful and appreciated if you give it a thumbs up to let us know that we are on the right track. And with that, ladies and gentlemen, get out of here. Happy trading, and I will see you in the next one.